Gold, which costs just $35 an ounce, has surged over 1,200% since the dollar abandoned the gold standard in 1971. This doesn't just mean gold became $4,000 more valuable today. It means the dollar became $3,965 weaker. What's happening now is an event we hadn't seen since 1996, and it's rewriting the rules of global money. Central banks of entire nations are quietly dumping the US dollar, the asset that was the pillar of the world economy for decades, and are buying gold at a frantic pace. What do they know about the future of money that you haven't discovered yet? And what does this massive migration of wealth from paper to metal reveal about the dollar's structural collapse that the media will never tell you? Stick around, because the answer is a survival map for the next decade. Forget everything you think you know about why gold is skyrocketing. The mainstream media is missing the real story, either deliberately or accidentally. Today, I'm pulling back the curtain on the untold narrative, the genuine reason why gold is defying all expectations and setting new records. You won't believe what's actually happening behind the scenes. The price has hit an incredible $4,000 an ounce, a milestone that, according to traditional logic, should never have been reached. And yet, here we are. Stay until the end to see what this truly means. Most people think they understand gold. They think it's just another shiny rock, a safe haven, a kind of insurance policy that investors seek out whenever things look shaky. And while that's partially true, it's not the true driver right now. What's happening with gold at this very moment is something deeper, something far more important, and something that almost no one is paying attention to. Let's slow down and think for a moment. Why is gold, of all things, setting new highs at a time when many experts insist it should be falling? If you follow the textbooks, if you listen to the analysts, you would expect the opposite trend. The Federal Reserve has been on an aggressive rate-hiking campaign, shrinking its balance sheet, fighting inflation with everything it has. By that logic, gold should be in free fall, yet it's exploding. The key to unlocking this mystery is that the story of gold isn't about what gold is doing, but rather about what the dollar is becoming. Gold is not like a company. It doesn't invent the iPhone. It doesn't deliver packages overnight. It doesn't launch the next big streaming service. It just sits there, unchanged as it has for thousands of years. If you had a gold bar in ancient Rome and handed it to someone today, it would be exactly the same. No interest, no dividend, no growth, just gold. That's why many people dismiss it. They call it boring, useless, a dead asset. And yet, despite producing nothing, it has quietly preserved wealth through every empire, every collapse, every inflationary spiral in history. This is not an accident. It is a fundamental feature. To understand why it's spiking now, you need to compare it to the one thing against which it is measured: paper money, specifically the US dollar. Let's go back to 1971. That year, the US officially separated the dollar from gold, ending the gold standard. At that moment, an ounce of gold cost about $35. Think about that for a moment. $35. Today, we're talking thousands of dollars for the same ounce. What changed? It wasn't the gold. It didn't multiply. It didn't improve. What changed was the dollar. Paper money is fundamentally different from gold because it can be created at will. And in times of crisis, governments and central banks print more and more of it, hoping to keep the system afloat. This is the inflection point that marks the beginning of the devaluation we witness today. In 2008, during the global financial crisis, the Federal Reserve's balance sheet was relatively stable, around $800 billion. But when the crisis hit its peak, that number almost tripled overnight. The Fed printed so much money to save banks and markets that something irreversible happened. Confidence in the dollar's permanence began to erode, and at the same time, the price of gold began to soar. Fast forward to 2020, a new crisis, this time global and even bigger. Once again, the Fed had no choice but to do the same thing, but on an even grander scale. The balance sheet exploded to nearly $9 trillion. The supply of dollars shot up vertically, and as before, the price of gold responded. Not because gold was creating value, but because the ruler we used to measure it, the dollar, was being stretched, diluted and weakened to an unprecedented degree. It is crucial to understand that the rise in gold is in fact a collapse in the dollar's purchasing power. Now, the mystery deepens. In recent years, the Fed has tried to undo some of that damage. They have been shrinking their balance sheet, the so-called quantitative tightening, and they have been raising interest rates, talking tough against inflation. By traditional logic, this is the scenario where gold should be falling. But it isn't. On the contrary, it's rising, hitting new records above $4,000, which forces us to ask, why is this force so powerful that it completely ignores the Fed's policy? What is truly pushing gold up when all signals point the other way? The secret the media won't tell you is that this is no longer just about inflation or the Fed's policy. It's about something much bigger: the global shift in power and the rise of nations that simply no longer trust the dollar. For decades, the dollar reigned supreme. It has been the world's reserve currency, the asset everyone had to own. Countries stored their wealth in US Treasuries, believing it was the safest, most reliable place to park their money. But over the last 20 years, that confidence has been eroded, and now it's accelerating. This movement has hit a geopolitical milestone that should be on every headline in the world. For the first time since 1996, foreign central banks officially hold more gold in their reserves than US Treasuries. Pause and reflect on the magnitude of this event. If you value this type of information, how about subscribing, turning on notifications, and leaving a like to continue expanding your mind daily? The world is exchanging the symbol of American stability, US debt, to the 5,000-year-old security asset, gold. This is the biggest monetary rebalancing in history, and it is happening now. Look at China, once one of the largest holders of US Treasuries. China has been selling off that debt in massive quantities. In its place, they are buying gold, and not just a little bit, hundreds of billions of dollars. Why would China, a rising economic superpower, do this? The reasoning is purely strategic and geopolitical. Gold is the only thing that cannot be frozen, cannot be sanctioned, and cannot be printed into oblivion by a rival government. Look at Russia. After sanctions isolated it from the global banking system, Russia doubled down on gold. The Russian central bank is now one of the largest holders. Again, the logic is clear. Gold does not depend on Washington's permission. It is a final settlement asset that exists outside the US-controlled financial system. Even India, which for decades kept only modest amounts of gold, has been quietly accumulating it at record rates. Their reserves are rapidly growing as they see what's coming. They know the global system is shifting. These countries and many others that make up the BRICS bloc and emerging nations are preparing for a world where the dollar is no longer the undisputed king. They are actively pursuing de-dollarization. And the only way to prepare is to own the one asset no government can devalue: gold. This is the real reason why gold is skyrocketing. It's not because of short-term fear nor the headlines about inflation, but because behind the scenes, the world's largest economies are transferring their reserves from paper to metal. It is a strategic migration of wealth that signals the collapse of confidence in the old monetary regime. This is an event that can only be compared to what happened in the 1970s when the dollar was delinked from gold. Gold is having its best year since 1979 with a 40% appreciation. And this performance is not accidental, but a reflection of deep geopolitical instability. And it's not just government. Wealthy individuals, investment funds, and even ordinary savers worldwide are doing the same. They see debts piling up in the US that will never be repaid, deficits growing year after year. They see trillions being created out of thin air to plug holes in the system. And they're asking themselves a simple question: do I really want all my savings tied to this? Gold is being seen as the only store of value that will withstand the inevitable final squeeze of the debt system. That's why demand for gold is increasing, even when traditional logic says it shouldn't. It's no longer about the Fed's next move. It's about a global realignment, a loss of confidence in the old order, and a desperate search for something solid to hold on to. Think of it this way. Imagine you are on a ship. For decades, this ship has been strong, stable, and unsinkable. Everyone trusted it. But then, cracks start to appear. First small, then larger. You pass them up, but deep down, you know the structure is weakening. What do? You grab a lifeboat, just in case. Gold is that lifeboat, and the urgency to grab the lifeboat is driven by geopolitics. Let's put some numbers to this to understand the scale of the problem. Over the last 25 years, gold has risen from about $279 an ounce to over $4,000. That's a gain of over 1,200%. Meanwhile, the U.S. national debt has exploded to over $30 trillion, with no end in sight. The belief that this can continue indefinitely without consequences is naive. When a government owes more than it can realistically repay, historically there are only two options: default, which is catastrophic, or inflate the debt, printing more money to decrease the real value of what is owed. History shows us that governments always choose the second path. They always print, which means the dollar will continue to weaken and gold will continue to strengthen. Gold hitting $4,000 is just the beginning of the dollar's devaluation. The US dollar had its weakest first half in 50 years, an unequivocal sign that the devaluation engine is accelerating. No, this does not mean gold will go to $10,000 an ounce overnight, but it does mean the upward trend is consolidated for the foreseeable future, because the story is not about gold becoming something new. It's about the dollar becoming something less. And here's the part that should keep you up at night. The rise of gold is telling us something about the world we live in. It's not just a chart going up. It's a signal, a warning, a thermometer measuring the fever of the global financial system. And that fever is rising fast. When governments, banks, and entire nations start racing to accumulate the same thing, it's not about greed, it's about survival. So the next time you see gold's price flashing across the screen, don't just think of it as an investment. Think of it as the geopolitical metric that is revealing the loss of confidence in the global system. The media will continue to point to interest rates, to inflation numbers, to temporary moves in the bond market, but those are just surface ripples. The deeper current, the one pulling everything forward, is this global migration out of paper and into gold. That's the real reason gold is skyrocketing. And the most shocking irony is that while entire nations are buying gold at a record pace to protect their sovereignty, much of the professional financial market is being left behind. A recent survey of fund managers revealed that 39% of them are gold broke, have no exposure to gold whatsoever. Only 6% have a reasonable exposure of 8% or more. This proves that the financial elite, the ones who should be anticipating these shifts, are stuck in outdated models and are repeating the mistakes of underexposure we saw in the 1970s. The question you need to ask yourself is not, is gold going to go up? The question is, if the world's largest economies are preparing for a post-dollar future by accumulating gold, why shouldn't I at least consider it? Shouldn't you wonder what they see that you haven't seen yet? Because by the time the answer is obvious to everyone, it may already be too late. The time to act now is now. And if you're curious to know why 735 Americans own more wealth than the poorest half, check out this video. If you want to understand how to prepare for these financial issues, subscribe so you don't miss the next videos. Don't forget to like and follow the channel. And tell me in the comments, what is your view on the dollar collapse? See you next time.